Get ready for some massive news. ARM is shifting gears completely, moving away from just mobile growth and focusing hard on high-value silicon to bypass that mobile growth plateau. We break down exactly how this strategic pivot is reshaping the future of technology and what it means for everyone.
Here's a simple way to protect your phone without stress. This ALEN 3-pack comes with tempered glass screen protectors, camera lens protectors, and an installation frame for an easier, cleaner fit. It's clear, case-friendly, and built to help guard against scratches and everyday bumps. Check the link in the comments to get it on Amazon.
Next up, we dive into the massive market movements today. ARM Holdings stock rocketed up 13.63%, driven by incredible demand for its ARM AGI CPU data center chip, signaling a third straight year of over 20% revenue growth. We also look at the broader market surge, including IonQ's impressive jump and AppLovin's strong quarterly performance. But the story doesn't stop there. ARM is signaling a huge future with its $2 billion AGI CPU backlog, announcing a major expansion of its product strategy centered around Agentic AI and physical AI as the main growth drivers for the next decade. This is a game changer for the semiconductor landscape. Finally, we look at the reality check. Despite the massive growth, ARM is also reporting a licensing surge that masks a slowdown in the overall smartphone market, showing a complex picture for the company's future. Don't miss this full breakdown. Stay tuned right now for all the details. ARM is executing a significant strategic pivot, shifting its core focus towards high-value silicon to overcome the plateau in mobile growth. This transformation marks a fundamental change in the company's identity, moving it from a provider primarily dependent on the volume of mobile components to a value-driven architect of essential infrastructure. This strategic realignment is a direct response to the structural saturation currently facing the global smartphone market, signaling a move toward more resilient and high-margin business segments. U.S. stocks experienced a significant rally today, fueled by strong artificial intelligence earnings reports and a notable decline in oil prices, alongside positive diplomatic developments between Washington and Tehran. The market saw broad gains, with the Dow Jones Industrial Average climbing 1.24% to close at 49,910.59. The S&P 500 advancing 1.46% to 7,365.12, and the Nasdaq jumping 2.03% to 25,838.94. Several key technology and consumer stocks captured investor attention during the session. ARM Holdings surged by 13.63%, closing at $237.30, after reporting fourth-quarter revenue of $1.49 billion and an EPS of 60 cents, both surpassing estimates. The company cited robust demand for its ARM AGI CPU data center chip, driving a third consecutive year of over 20% revenue growth, with licensing revenue up 29% year-over-year. IonQ shares jumped 9.52% to $52.57, driven by exceptional first-quarter revenue of $64.67 million, significantly beating estimates of $49.73 million. Revenue surged 755% year-over-year, propelled by strong quantum system sales and growing cloud usage. AppLovin saw a slight dip, with its stock falling 1.94% to $468.83. The company reported first-quarter revenue of $1.84 billion and an EPS of $3.56, exceeding expectations, alongside substantial operating and free cash flow generation. Snap stock remained flat at $6.11, though it experienced a sharp drop in after-hours trading, falling 9.47% to $5.53. Snap reported revenue of $1.529 billion, narrowly topping estimates, supported by strong advertising trends, including a 226% increase in click-through rates for sponsored snaps. Beyond Meat's stock saw a significant surge of 13.28%, closing at $1.04. Despite a slight beat on revenue, the company faced headwinds, reporting a decline in U.S. retail and food service revenue segments. Overall market sentiment appears optimistic, driven by AI sector performance and geopolitical stability indicators, as investors continue to monitor these high-momentum stocks. ARM is signaling robust demand from hyperscalers, evidenced by a $2 billion backlog for its AGI CPU, according to recent reports. During its earnings call on May 6, ARM unveiled a major strategic pivot, positioning Agentic AI and physical AI as the core growth engines for the coming decade. The company has defined agentic workloads as a key focus area in its future product roadmap, emphasizing a shift toward more sophisticated, autonomous AI applications. This strategic realignment suggests a strong market appetite for ARM's underlying technology as it moves toward next-generation computing paradigms. ARM's recent financial results reveal a significant revenue surge, though this growth contrasts with a broader slowdown in the global smartphone market. The company reported fiscal fourth quarter revenue of $1.49 billion, marking a 20% increase year over year and nearly a 20% rise compared to the previous quarter. Furthermore, net profit saw a substantial jump, climbing 49% from the same period last year to reach $313 million. Operating income also experienced growth. This strong performance from ARM suggests resilience within specific segments of its business, even as the overall smartphone market faces headwinds. Analysts are closely watching these figures to gauge the future trajectory of the semiconductor industry amidst current market uncertainties.